Well, let's take a look at the markets, and the local exchange may benefit from a positive global session this morning with Chinese policymakers offering some monetary policy support. Carmen Mpelwane, Absa Asset Management Portfolio Manager, joins us now to talk through the latest market sentiment. Carmen, very good morning. Give us a sense of how the markets opened an early trade after shares on the Johannesburg Stock Exchange slumped heavily in the last session.
Yeah, so we've opened up in the green this morning, and as you mentioned, largely driven by what's been happening in China. And that support has read through to tech stocks in China, and specifically Tencent, which was up over 3%. So definitely a read-through in terms of that. And then we also see the resources opening up quite strongly this morning as well, and that's given significant support to the JSE this morning.
Oil prices are down this morning. Talk us through some of the factors that are driving sentiment.
So there has been some chatter around the potential of Joe Biden going to Saudi Arabia, and the pundits are saying that if that is the case, there's a 50% probability that Saudi Arabia will increase their production, or OPEC Plus will increase their production of oil, which is giving some weakness to the oil price. We've also seen that India has indicated they are looking to boost their imports from using Russian oil. So all of this obviously will lead to lots of volatility as usual, but we are seeing market weakness in the oil price.
Now, S&P Global and Fitch Ratings are scheduled to publish a rating review of South Africa later tonight. What can we expect from those sentiments?
Yeah, I think if anything, there's some read-through from what Moody's did a few weeks ago, and specifically in April, where they moved from a negative outlook to stable. That, they said, was largely driven by the fiscal stability that they've seen come through, and this has been supported by stronger commodity prices over the last few months. What that does mean is that the outlook probably is going to be slightly more positive. So that's what I would look out for from S&P and Fitch later today.
And staying on that positive vein, the Competition Commission has recommended the approval of Massmart's 1.36 billion sale of fresh food assets to Shoprite. Talk us through all the specs of this deal.
Yeah, so we did see Massmart come out with a 90-week trading update yesterday. We saw significant weakness in the share price. And this is largely driven by the very, very slow pace of the turnaround. We had expected to get better numbers, I think, out of the general merchandising side, and specifically the durable sales, but that hasn't come through for Massmart. And specifically for this deal, it's focused on the cash and carry, which includes Cambridge Rhino stores. And those were significantly down. So discontinued operations, we saw down over 15% for the 19-week period, largely driven by Cambridge, was down 18.6%. So it doesn't bode well for Massmart, but Shoprite has indicated that their view is that they'll be able to turn this around and use economies of scale by incorporating this into their discounter model, which is the USAVE brand. So there are conditions, as management have guided in the SENS announcement this morning, related to the sale, but they haven't given us much clarity. This was announced last year, August, but we are hoping to see further clean up of the portfolio from the Massmart side. Until then, I think the pain is going to prevail.
Carmen Mpelwane is the Absa Asset Managers Portfolio Manager. Thank you for taking us through the markets this morning.